U.S. stocks rebound. United States stock market. U.S. stocks gained traction on Thursday amid gains for chip producers and an improvement in credit conditions. The S&P 500 rose 0.5%, and the Nasdaq 100 gained 1.3%, while the Dow rose 200 points. Memory chip producers were sharply higher as markets reconsidered the speculative outlook of AI infrastructure manufacturers. These were magnified by the introduction of SK Hynix ADRs tomorrow, the world's largest memory producer, with reports stating the receipts are 7 times oversubscribed. Micron and SanDisk were 7% up. Meanwhile, oil prices and bond yields eased amid evidence that laden tankers continued to cross the Strait of Hormuz despite fresh attacks between the U.S. and Iran. This supported the financial sector with Morgan Stanley, Goldman Sachs, and American Express, adding around 3% each. Meanwhile, Meta rebounded from early losses to a 2% gain after announcing it will target production of its own AI chip by September. Gasoline eases off one-month high. Commodity U.S. gasoline futures fell to $3.05 per gallon after reaching near one-month high of $3.10 on July 8, as markets reassess the supply outlook following renewed U.S.-Iran tensions in the Middle East. After revoking the 60-day waiver that allowed Iran to sell oil on global markets, the U.S. launched retaliatory strikes in response to attacks on American bases, renewing concerns over potential disruptions to shipments through the Strait of Hormuz. However, selected laden tankers from the UAE continued to ship their material, softening concerns that exports from the region could return to a standstill. The possibility of a crude supply glut amid accelerated output from a higher OPEC plus quotas also weighed on prices. Still, concerns remained on whether global refineries have sufficient capacity to process the excess supply. U.S. mortgage rates tick up. United States 30-year mortgage rate. The average rate on a 30-year fixed mortgage edged up to 6.49% as of July 9, 2026, from 6.43% the previous week. Mortgage rates have not changed much recently, but economic growth and housing affordability continue to improve for homebuyers as they shop for homes in today's market, said Sam Kater, Freddie Mac's chief economist. Meanwhile, minutes from the FOMC's June meeting showed that only a few policymakers favored a rate hike, although officials expressed growing concern about inflationary pressures. Markets continue to price in at least one Federal Reserve rate hike by the end of 2026. European stocks rebound. Euro area stock market. European stocks closed firmly higher on Thursday, rebounding from the losses in the previous session as concerns of tighter monetary conditions eased. The Euro Stoxx 50 added 1.2% to close at 6,282, and the Stoxx Europe 600 advanced 0.8% to 640. Stocks of the AI sector rebounded ahead of the start of trading for SK Hynix in the United States tomorrow, with reports that the ADR is 7 times oversubscribed, challenging recent calls that data center companies are overinvested. ASML and Infineon jumped over 4% each, while Siemens Energy and Siemens advanced over 3%. In the meantime, banks tracked a recovery for Eurozone bonds amid a pullback in energy prices, as tanker flows through the Strait of Hormuz persisted despite the strikes between the U.S. and Iran. Santander, Intesa Sanpaolo, and ING added around 2%. In turn, UniCredit gained 2.6% amid the increasing likelihood that it will acquire Commerzbank. FTSE 100 lags Europe as AstraZeneca tumbles. United Kingdom stock market. The FTSE 100 edged lower on Thursday, lagging its European peers as heavyweight AstraZeneca weighed heavily on the index. The pharmaceutical giant, the FTSE 100's second-largest constituent, plunged 7.3% after its gene-silencing therapy Wainua, developed with Ionis Pharmaceuticals, failed a late-stage clinical trial aimed at reducing heart complications in patients with a rare cardiac condition. Energy stocks also added to the pressure, with Shell falling 1.3% and BP losing 1.9% as crude oil prices retreated. Investors remained focused on developments in the Middle East, where uncertainty surrounding the U.S.-Iran ceasefire continued to fuel concerns over energy supplies and inflation. Elsewhere, Severn Trent said trading remained in line with expectations after a strong start to its 2027 financial year. Meanwhile, the latest RICS survey showed UK house prices continued to decline in June, although the pace of falls eased slightly, suggesting the housing market may be stabilizing. Heating oil eases from one-month high. Commodity U.S. heating oil futures fell more than 2.5% to $3.56 per gallon on Thursday after surging over 10% in the previous session to the highest level in more than a month, as traders judged that the latest U.S. strikes on Iran were unlikely to trigger a broader conflict. While security conditions in the Strait of Hormuz have worsened and tanker traffic has slowed, markets are not pricing in a full closure of the vital shipping route. Investors instead expect energy flows through the Persian Gulf to continue recovering despite renewed hostilities. Elsewhere, Russia, a major diesel producer, announced it would suspend exports and become a net importer after higher crude prices and repeated Ukrainian attacks disrupted operations at key refineries. Heating oil prices remain well above pre-conflict levels despite retreating from the record high reached in late March, reflecting persistent concerns over global fuel supplies and refinery output. Oil eases as traders reassess Hormuz risks. Commodity crude oil slipped below $73 per barrel on Thursday after surging 4.4% in the previous session, its biggest daily gain since May, as investors reassess the impact of renewed U.S.-Iran tensions on Middle East supply. The latest escalation, including additional U.S. strikes on Iran and retaliatory attacks on American bases in the region, has put the Strait of Hormuz back at the center of energy market concerns. Still, the scale of any disruption to oil flows remains unclear. Vessel tracking data showed fewer transits through the strait, with most visible traffic moving along routes approved by Iran, while activity on the U.S.-backed Omani corridor was limited. Traders noted, however, that substantial volumes of crude had continued moving through Hormuz before the ceasefire, with some shipments only appearing in tracking data days later because of weak or disabled signals. U.S. nat gas prices fall to 6-week low. Commodity U.S. natural gas prices dropped more than 4% to $3.07 per MMBTU on Thursday, the lowest level in 6 weeks, pressured by planned maintenance at Freeport LNG in Texas and a larger-than-expected increase in storage. Freeport LNG said maintenance work at its pretreatment and liquefaction facilities will begin on July 10th, raising concerns about a temporary slowdown in export demand. Also, EIA data showed inventories increased by 61 billion cubic feet in the week ended July 3rd, above the 5-year average build of 51 BCF, reinforcing expectations of comfortable supply. Despite the decline, weather forecasts continue to point to above-normal temperatures through July 23rd, supporting demand for gas-fired power generation. On the supply side, gas output in the lower 48 states fell to 109.4 BCFD in July so far, from 110.0 BCFD in June, and was below the record monthly high of 110.6 BCFD reached in December 2025. Baltic Dry Index up to 1-month high. Commodity the Baltic Exchange's Dry Bulk Freight Index, which monitors rates for ships carrying dry bulk commodities, rose about 1.4% to its highest since June 8th at 2,910 on Thursday, following a marginal decrease in the prior session. The Capesize Index, which typically transports 150,000-ton cargoes, including iron, ore, and coal, advanced 2% to a 1-month peak of 4,569 points, and the Panamax Index, which tracks vessels carrying around 60,000 to 70,000 tons of coal or grain, rose 0.4% to 2,253 points. Among smaller vessels, the Supramax Index went up 0.8% to 1,700 points. U.S. natural gas stocks rise more than expected. United States natural gas stocks change. U.S. energy firms added 61 billion cubic feet of natural gas to storage in the week ended July 3rd, exceeding market expectations for a 49 BCF injection, according to EIA data. The build also topped the 53 BCF increase recorded in the same week last year and the 5-year average of 51 BCF. Total working gas and storage rose to 2.983 trillion cubic feet, standing about 0.5% below the level seen a year earlier, but 6.6% above the 5-year average for this time of year. The latest increase followed an 87 BCF injection in the previous week ended June 26. Canadian stocks rise on Mining Gains Canada stock market. The S&P/TSX Composite Index gained nearly 0.5% to trade above the 35,000 mark on Thursday, supported by strength in the mining sector. Gold prices move higher as the U.S. dollar stabilized, lifting Barrick, Agnico Eagle, WPM, and Franco-Nevada by about 1% each. Financial stocks also advanced, with RBC and TD Bank gaining more than 0.5%. Elsewhere, Triple Flag added over 0.5% after reporting preliminary second quarter revenue of $129.2 million, up from a year earlier. Fire and Technology jumped more than 5% after beating second quarter revenue estimates. Also, Meta announced plans to build its first Canadian data center in Alberta, underscoring continued investment in AI infrastructure. Investors now await Canada's June employment report on Friday for further clues on the Bank of Canada's policy outlook. Markets widely expect the central bank to leave interest rates unchanged at its next meeting.